Hello, Trader Stan here. Let's take a look at the markets for March 15th and the new trades today in the letters. We actually didn't give any in the weekly options trader, but I'm still going to send you this so you can see what we did in the swinging options trader, and then obviously is our little market bias here. So spiders, a big bullish gap up this morning and on the lower PPI, got the market excited. We have FOMC tomorrow. We're in a trading range. We're in a downtrend. Look at the declining 20, declining 50. It had a but for FOMC tomorrow, this is a very encouraging bar because it went very deep into these two ugly red bars, and it defended these two lows. So buyers are stepping up here. So could this be a higher low to break out to be a trend change? I don't know yet. We'll see, but we're still in a downtrend. Trading range in a downtrend. So we were very light because of FOMC tomorrow. Diamonds looks the absolute best of the four horsemen that I call, because this had a closing breakout. So I was telling folks in the green room, if we close like this, if today were hypothetically tomorrow at 4 p.m. after and this is what it looked like after FOMC, I would be bullish on the diamonds tomorrow over today's high. But tomorrow we have FOMC to deal with. Qs made a lower low, snapped back, but still in a downtrend. They've been lagging the other horsemen. IWM, a big fat nothing. So we're in a holding period. There's very few compelling swing patterns. It's been a day trading environment right now. So pre-market, I sent COUP, C-O-U-P, which was a huge exhaustion gap down to all-time lows on earnings. I sent it to our weekly options trader saying, look, 30-minute high, we're going to sell a put spread. This was the opening print. So notice it didn't even sell off at all. The big old gap down, already you have buyers. So write it like, I should have given the weekly options trader a put spread, but we entered this pretty aggressively at like 9.32 or 3 or 4, whatever it was, and we gave it instead to the swing and options trader. We shorted the $60 way out of the money puts for Friday, took in 80 cents a share, and the reason we gave it to that letter is because we said, look, no stop. I can't give a no stop to the weekly options trader. But here we said, look, we'll take ownership, we'll roll it, whatever the case. So we have more flexibility there. And it actually rallied so robustly that we closed it at 15 cents on a rally, like within a half hour. So that turned out to be a fantastic trade. Juliet Delta, we did the same. The whole sector's been under fire. These are the Chinese internet stocks, climactic buy setups. I've been watching 5 or 6 of them. This one looked the best, and we sold an out of the money $35 put for Friday. Way out of the money, no stop. Same rationale as the COUP, and we're already way over 50% of max value. STZ, just breakout of a bottoming pattern here with a price void. We sold the 207.5 puts, 10 days to expiration, and stop under last week's low. And it's just a beautiful put spread, all the support. If you did 95 cents, so depending on how many contracts you did, if you did 10, $950 goes right into your account. Pure profit if it stays over 207.50 in 10 days. Again, it's a wild card for FOMC, but a couple of stocks here I'm watching anyway. XLU, greater than 100% retracement. This is the utility ETF, came in, gap reversal, 2 red bars, closing breakout from a sloppy buy setup. SHLS, nice gap breakout, bottoming pattern, 20 MA curling, bullish engulfing, price void, that looks great. This is not a bottoming pattern, but I started making a list for potential short put spreads for Friday only, but depending on what happens in the market. This is just, gotten creamed and stabilizing. Carvana, CVNA, at least has a higher low, bullish engulfing, closing breakout. Technically that looks a little better. Home Depot, higher low, wide range bar, red bar ignored, puts red candidate, RMG. Nah, this one's down a lot, but I need a more what we call potent reversal. Oracle had a nice day, closing breakout, CVS. Closing breakout after yesterday's big old bottoming tail, which turned out to be a downside shakeout. And that's enough for now. PayPal, bottoming pattern, but it could be a bottoming pattern to kerplunk and go to lower prices. So we'll be looking for, signs of some type of, gotcha bar that doesn't want to go down anymore. Then it has a good price void, and we'll be keeping an eye on this both for directional and puts red. That's enough for now. We're going to continue to be in day trade mode tomorrow ahead of FOMC, and just bear in mind, FOMC, you typically get 3 wild whips. You get one right upon the announcement at 2 o'clock. You get one at 2:30, at 3. And then, in my experience, you still can't you can't get aggressive based upon the 4 p.m. close. You really got to wait till 10:30 the following day, let things sort out, and then you can start slowly getting into more swing trades, provided, of course, the pattern sets up for it. Hope that helps. As always, email Greg or me with any questions, and we'll see you tomorrow in Telegram.